Imagine a city built on innovation, now watching its brightest minds quietly pack their bags. That's Seattle in 2026. Once a magnet for tech giants and six-figure salaries, the Emerald City is facing something few saw coming: a slow, steady exodus of its tech workforce. And with it, the housing market that fed on tech money for more than a decade is beginning to tremble. In this video, we'll uncover why Seattle's tech reign is fading, what's driving professionals to leave, and how the city's real estate future hangs in the balance. Stay until the end to see which neighborhoods could be most at risk and where opportunity might quietly return. For 2 decades, Seattle was unstoppable. Amazon, Microsoft, and hundreds of startups turned the region into a powerhouse. High salaries, booming real estate, and a new class of tech wealth reshaped the city. By the mid-2000s, it looked like a golden age that would never end. But every boom eventually reaches a breaking point. By the early 2020s, subtle cracks began to show. According to KNKX Public Radio, from 2018 to 2022, more people moved out of Seattle than moved in. A major shift after a decade of nonstop growth. Data from Karat also revealed a decline in elite software engineering talent choosing Seattle. And Business Insider reported that between 2022 and 2023, Seattle was one of the top cities tech workers were leaving. Put together, the message was clear: Seattle's momentum was fading. So what's behind this exodus? 5 main forces are reshaping Seattle's tech identity. Number 1, cost of living. The city's housing prices and rents exploded, outpacing even tech salaries. A good job no longer guaranteed an affordable life. Number 2, the business climate. The Washington Policy Center notes that companies cite rising taxes and a tightening regulatory environment. Some now see Seattle as less friendly for business growth. Number 3, remote work. The pandemic changed everything. Tech employees learned they no longer need to live in a hub city to land a hub-level job. Number 4, competition. Cities like Austin, Denver, and Nashville are actively recruiting top tech workers. Seattle's advantage is shrinking. And number 5, industry layoffs. As the tech sector resets, companies are cutting thousands of positions. Cronline called it the end of Seattle's golden age for tech workers. Let's look at what the data shows. KNKX reports Seattle's job openings rate fell below the national average, a signal of cooling demand. Business Insider found a 2.5% net loss of tech workers leaving the city between 2022 and 2023. Karat's study ranked Seattle's share of elite engineers dropping from 3rd to 7th place nationally. The evidence paints a consistent picture: fewer newcomers, more departures, slower growth. So what does this mean for Seattle? Job growth is flattening. Mid-level engineers face fewer career options. And when tech slows, it ripples outward into restaurants, housing, and services. Startups are reevaluating whether Seattle is the best place to build. Even local investors say the region's tech crown is slipping. But this isn't a collapse, it's a transformation. Seattle's slowdown doesn't just hit tech workers, it ripples through the city's entire economic ecosystem, and the effects are visible almost everywhere. When fewer people move to the area, restaurants lose weekday lunch crowds, rideshare demand falls, and small landlords feel vacancies again. Downtown retail corridors that once buzzed with engineers grabbing coffee between meetings now sit half empty. For home buyers, the impact is complicated. Prices are still high, but bidding wars have cooled. creating an uneasy middle ground, a market that's expensive yet slower. Even city planners are reevaluating future tax revenues and transit ridership projections. It's a feedback loop. When fewer high-income earners live and spend locally, city budgets tighten, which can reduce public services that make a city attractive in the first place. So what happens if the tech base continues to shrink? Seattle might face what economists call a slow bleed economy, not a crash, but a steady loss of momentum that compounds over years. Yet resilience is built into Seattle's DNA. The city has reinvented itself before, from timber to aviation to software. And there are still bright spots. Amazon Web Services continues to expand cloud infrastructure globally, with thousands of Seattle-based engineers behind the scenes. Smaller AI companies are drawing new investment rounds even as the broader market cools. The University of Washington remains one of the nation's top producers of computer science graduates, talent that often seeds local startups. Think about that for a second. A single university can act like an anchor industry for an entire city. And beyond tech, green energy firms, biotech startups, and logistics innovators are starting to fill some of the economic gaps left by big tech hiring freezes. Seattle's challenge now is to nurture these emerging sectors fast enough to offset what's leaving. Let's imagine three paths forward. Scenario 1, policy reboot. City and state leaders roll back some business taxes, speed up housing permits, and make it easier for companies to operate downtown. In that world, growth could restart within 2 years. Scenario 2, hybrid reinvention. Seattle embraces remote work instead of fighting it. Companies keep smaller, creative offices for collaboration days while allowing employees to live anywhere in the Pacific Northwest. That keeps the local network alive without forcing expensive daily commutes. Scenario 3, gradual fade. Nothing changes fast enough. Costs stay high, startups relocate, and the tech brand slowly erodes. The city stabilizes, but at a lower level of economic activity. Which one happens depends on choices made right now, by policymakers, by companies, and by workers deciding whether to stay or leave. The story of Seattle is not just local, it's a signal to every major tech hub. When a city depends heavily on one sector, prosperity can turn fragile. But reinvention is possible. Think of how Pittsburgh transformed from steel to robotics, or how Austin grew from music town to tech capital. Seattle could follow the same playbook if it acts early. In the end, Seattle's fate won't be decided by tech alone, but by its ability to stay attractive to human ambition. People build cities, and people can rebuild them. Subscribe for monthly Washington market updates. Thanks for watching.